Hello, everybody. What we got? 15. My 15 regulars. How's everything going? Let me turn off this heat. I don't want to hear this noise. This market is awful. I can't believe the threat of global nuclear destruction could create such volatility. Who would have thought? Anyway, it's hard to focus on individual names when there's so much carnage happening in the stock market and in the world, but I will pretend like it's not happening and get right into it. So Groupon. So I do not own Groupon on my account into today, and I don't own it now. I did put on a position in my family account this morning. I bought some stock and I have shorted out of the money April and May puts. So my thought with Groupon, first was that it was a complete dumpster fire of a quarter and guidance. I never thought the guidance was ever going to be achievable. Sorry, that the street was ever going to be achievable that was published. And I thought that the stock would get wrecked. And as I went more into the numbers, I still think there's a lot of better ideas out there than Groupon, but I'm much more constructive on the way this stock's going to trade in the coming months. And I think it'll probably have a big short squeeze. So what did I see that I liked in Groupon? Well, what did I see that was really scary to me? The scary part was that Q1 of last year was in the middle of COVID. So January and February were atrocious months in Q1 2021. And March of 2021 is when it started rebounding. And I think April was the best month of the year for Groupon last year. And last year, and I think these numbers are all right, but just bear with me. Last year, the company did, I'm just looking at service. I'm not looking at goods. They did 167 million in gross profit in Q1 of last year. It was down 19% FX neutral. And in Q1 2020, they did 201 million of gross profit, down 34% FX neutral. Now for Q1 2022, they're guiding to a 160 to 170 revenue line, which will probably be somewhere between like a 140 and 150 gross profit line. So you're going to see gross profit down again. Of course, the easy ones go out. You're going to see gross profit fall again, another 15 to 20%. That's despite last year being just an atrocious lockdown quarter. They then guided to EBITDA being flat when last year it was like 30 million. And the reason for that is that they're ramping marketing just to get to the gross profit numbers that I have just went over. So it's not even an apples to apples gross profit from Q1 of last year. It's lower quality. The reason why I'm constructive on this is that I think that the fact that if you look at their service quarters and their local customers, even with what just happened with Omicron and what they're guiding to with Q1, it's hard to imagine that this isn't close to a base core floor, which was always the thesis that when you hit this kind of rock bottom, from a supplier standpoint and a customer standpoint, all you can go is up. And if it ever happens with the inflection point, the stock, will double or triple. And the reset that they just did, which I'm sure this new guy put in very achievable numbers. Now, they didn't guide to the full year revenue. They guided to the full year EBITDA. And obviously, they expect EBITDA to really ramp in two, three, and 4Q, since they're not making any money in first quarter, though they sandbag. So I'm sure they'll make $10 or $15 million in EBITDA in the first quarter. You have a setup basically to where now that goods is completely decimated, there's no profitability really left at all there. All you have yet left is this core service business. And if you use the, not the 20 billion, but the 10 billion value for sum up, that's $250 million value on the balance sheet. The rest of the cash and receivables just kind of offset liability. So I don't count any net cash beyond that. You'll have free cash flow this year for the first time. You can hear in the conference call all of the kind of working inventory, not working inventory, all of the working capital issues they had last year with the shrinking of the business should go away this year, and you'll start generating free cash flow. So you're sitting on because the stock's $20, a stub stock of whatever it is, $12, $13. And, it should be achievable for them to do, well north of $1 in free cash flow this year, maybe even $1.50 on that stub. But really what matters, of course, is that they stabilize the business and grow it over time. So do I love owning the stock here? Not really. I really like selling the puts because I think that people that own this now will give this new guy many quarters to put his stamp on it. And the implied volatility is so high in the puts. April, you don't even see a quarter. In May, you're going to see a quarter and a guide. But like I said, I believe that the guidance is sandbagged. So I'm not worried about quarter one, of course. It would be that quarter two comes in light, which is definitely possible. I just think people are going to give the guy a really long leash here since he's new. Of course, your risk is that also the world's falling apart. So, is there easier trades out there? Probably. But that's how I would play Groupon. I no longer like call spreads in it because I don't know how long it's going to take for this turnaround or the upside scenario to play out. If you get to the point where the customer numbers are stabilized, it's just really hard to tell what this business looks like on the other side of COVID. I was pretty impressed by the locals business, given I just expected devastation, given what the credit card data shows. And when you go to their website, quite frankly, the inventory sucks. As a consumer, I don't see things that I want to purchase. So for me, it was really surprising to see the kind of resilience there. So that's my Groupon thoughts. Happy to answer any questions there. It's very unlikely I'll put anything back on my own account. The margin IB keeps going to like 70%, and it's just too much margin for what I think is, an inferior position and a risk reward versus the other things I have in my portfolio. So Groupon. Magnachip had some interesting stuff that happened yesterday. There was a very small or $95,000 insider purchase by the CEO. And then there was like a $250,000 sale by a manager. The purchase was only like 1% of his diluted shares. So it was kind of a token purchase that doesn't mean anything. He clearly made that purchase to offset the psychology of the guy selling. The guy selling only sold like a few percent of his shares too. What this does mean, though, because these weren't pre-planned buys and sales, is that they're, of course, not very close to a sale of the company right now. You could debate how far along they could be, if they could even shop the company, if he's going to do a purchase like this. I meant to look. I forgot to look to see if there were any insider sales in the fall or January or February of last year. I don't think there were, but the stock was, lower, much lower than this. I don't own this stock for a sale. I still very much think there will be a sale. I don't know whether it's going to happen in 3 months or 6 months or next year. One thing that they might do, which I've said many times on here, is they might just keep this company public until they show the 2023 ramp and then sell it at 40. I think it definitely could get $40 if they come even close to what their guidance is for next year. So maybe the board decided to wait. Any thoughts on this? SGL Partners will be the front runner to buy MX. I saw that article. That article was pretty weak. I think SGL, are you talking about, hold on, let me see if I know what you're talking about. I want to make sure it's the same article. Yeah, I'll send it. I'll tweet it out. I think that article is just kind of fluff, Lou. It came out a while ago. I thought the original article that JP Morgan was going to start shopping the company after they put out their quarter four earnings was the more important article. But now you have the CEO buying some stock in the open market, which could put some cold water into how he's able to do that. Now, mind you, they've been blacked out for well over a year, right? They were blacked out in January, February, and March of last year for sure. They were very close to a sale. And Maisie, and they were blacked out the whole time that they were in a signed deal with Wise Road. So for the manager to sell a little bit of stock is not concerning to me. Maybe he needed a little liquidity. It's the purchase that's more concerning, only because that means they're not, imminently close to a deal. That's all. So yeah, it is what it is. It doesn't change anything for me. I just would prefer not to see any transactions at all on MX. Okay, so that's MX. We have now come to the victory lap portion of the evening. Not very many people watch the video, but I pitched CTIC back in the fall at $1.80, $1.70, $1.80. It might have went to $1.90 while I was on the phone, while I was on the YouTube. Basically, the pitch there was that the major amendment that happened was a good thing, not a bad thing. I went into detail about why I thought it was very likely the drug would be approved. The drug was approved today. The stock's up 45%. It's $2.77. So another win in the biotech column. Of course, the big one is AXSM. They reported today, and they said they are not in labeling discussions, but they said they will 8K it when they go in labeling discussions, or if there's anything other material that comes out of this process. That to me is very significant, because now you don't have to wait for approval for the quote unquote event. You just need the 8K that they've entered labeling discussions. So I still very much like the April-June put spread, calendar spread that I have on there, because I think that if you get to April and you haven't gotten an 8K yet, or a CRL, it's very likely this is approved. I think we should have it approved before April OpEx anyway, but I'm still very constructive on AXSM. My biggest concern there is that it just doesn't go up a lot because the market's so bad. I need it to go above 50, really above 60, hopefully, for me to have my maximum call spreads. And I don't know if that's going to happen anymore. But I still have a sizable position there. It's all in call spreads, June call spreads, and then I have those April, June calendar spread. What else should we update you guys on? MNTV and ZN. I still own both my positions there. Both of those, I don't know any common. I own call spreads in Zen and MNTV going out to July, and I'm short put spreads or puts in MNTV there. Nothing really special there. But I have the position on, so I'm just mentioning it. Thanks, Brent. CNR. So I made CNR much bigger today. That's down because they reported earnings and they did not sign a definitive deal with their majority shareholder. It's actually not a majority shareholder, by the way. They own 49% of the company. And for whatever reason, the market's taking it down on that. I assume it's not because of earnings. The buyer, of course, had access to those earnings before they made the bid. I mean, I really like CNR. I talked about this in my previous video. You can go look. But the concept behind CNR is that 2022 is going to be booming, and the company refused to guide or do a conference call today. If they were going to kill this deal, either the board or the majority holder backing out, I think today was the day they would have done it, and they would have done a conference call and guided. Instead, we're now 3 weeks, I guess, something like that, 2.5 weeks since the best and final, and we have no deal and no break. So to me, the only real plausible explanation is that somebody else might have came in with interest. Now, the minority holder says they won't sell the company to anybody else, but the board still has to entertain any offers that come. Note, they only own 49% of the company, not a majority. So the fiduciary responsibility of the board is to find the best deal. And I'm not sure why they can't block. I can tell you they can't block it at 49%. Now, of course, practically speaking, they can block it. And they're never going to get 100% of the vote of the 51% to overrule it. But I think it puts the board in a bind when it comes to the negotiations with the majority holder. Best and final in the U.S., I was reminded, does not mean anything legally. So they could still bump it. Do I think they're going to bump it? No. What I think is going to happen is this is going to get done at 24.65. I think that every holder is telling the board and management they want to sell at 24.65. You can see where the stock's trading at 21.60. And I'm very constructive on CNR working out. The wild card is always the stock market is nuts right now, right? The Russell's down 2%, S&P is down 1.5%. It's just a nasty stock market. And it's hard being long special sits in such a nasty stock market. But my break price on this, I think, is around 18, not the 14 to 17 it was before this bid, because the only way this breaks is if the board decides that 24.65 is not enough. It's my belief the board has already decided 24.65 is enough. That's why they issued a press release saying this was the best and final. If you read the 13D that the buyer posted, they had been in negotiations with the special committee already. This is not the first offer. It's the best and final offer. So you then have to ask yourself, what was the holdup? Well, the holdup is two things for sure. Okay. One, they wanted to see where the stock would trade so they would know if they get the vote. The answer is yes, they'll get the vote. The stock's 21.65, not 27. But two, by putting out the press release saying that there's a bid for 24.65, it invites other bidders to present an alternative transaction. Now, again, the bidders know they're very unlikely to be able to get any success here because the 49% holders said they will not accept anything else. Of course, they're going to say this. They don't want anyone to come in over the top of them because it makes them have to increase their bid to the special committee. That's the only thing they're going to say, is that we will not sell to anybody else. So I think there's a decent chance of an over-the-top bid here and a decent chance of the buyer upping their bid. I have two positions on here. I'm long common and I'm long June 2025 call spreads. I like the June 2025 call spreads a lot because if this breaks, I don't think the break price is, like I said, much below 18. And if it breaks before, let's say, middle April, you still get 2 full months of time value on those call spreads. You get to see guidance, you get to see earnings, and those call spreads will have at least, $1 in value in them, down from the 250 they're trading at now. So you don't lose 100% of your capital in the call spread. Now, the problem with the call spread, of course, is that you don't get any of the upside if there's a bidding war and the majority ups their price. So I have a hybrid position. I own common and I own the call spreads. And yeah, I like it a lot. It's now a fairly sizable position. SHLX, I still, of course, love that. Since the last time I talked to you guys yesterday, or not yesterday, wasn't yesterday, right? A few days ago, my numbers changed a little bit. I actually think now on the base case there, you get a 15% bump, not a 12 or 11%, I said. That's the base case. Really, I think it's probably the bear case. And that gets you to a 14.90 return from the 13.75 here, which is phenomenal. I think that's what it is, 14.90, maybe even plus the 30-cent dividend. I can't remember what I had here. I see it now. Yeah. 14.90 gets you, hold on, 15%. I'll tell you right now. Yeah. 1510 to 1520 all in is what I think you get in the base case versus your 1375 now. So I like that a lot. Any BMYRT transactions the news last week? I have not heard of any transactions, Brent, in many weeks. My friend that pings me on this stuff, it just hasn't traded. My guess is the next time we see movement in BMYRT will be after the judge dismisses the motion for dismissal, which is supposed to be like a shoo-in call, but that's probably the next thing people are looking at before they move it. Honestly, the $1.50 value for BMYRT makes all too much sense to me. You know, I think I talked about this in a previous YouTube, but people that are buying that are assuming it takes 3 years. They settle at $3, and that's a 25% CAGR between now and then. And that's their base case. The bear case would be you don't settle in 3 years, you settle in 5 years, and you settle at $2 and not $3. Bear case would be you go to trial and they lose. And then, of course, the bull case is obvious. So people that do finance litigation, it's pretty attractive. 25% CAGR over 3 years. They could settle sooner. It seems unlikely that they settle sooner than that. So I think it's probably priced at the right price. And I don't think you're going to see a huge amount of movement in BMYRT anytime soon, unfortunately. This is one weird ass stock market, man. Oof. What a headache. What else did I say I was going to talk about? Anybody? What did I write here? Can't even see my title here. How the hell do I see my title? You put hedges on this environment. No, Glenn, I haven't hedged I haven't hedged anything since April or May of 2021. What I try to do is just stick with stocks that I think are going to be uncorrelated and pray. But no, I don't put on hedges. Over the course of the last 15 years, all they've done is cost me a ton of money. But unfortunately, when by doing that, I have to cut exposures when stocks fall. All right, thanks. AMPY. Thanks, Brent. AMPY put out an update this morning. That seemed pretty constructive to me, but what do I know? I mean, they announced lawsuits against 2 shipping companies, and they said they had preliminary repairs of the pipeline, but it was worded very vaguely to where they have not been given permission, of course, to repair the whole pipeline and restart. They purposely worded it like that. I'm guessing. AMPY now, you have all sorts of levers to make a lot of money in the future on it. I mean, they could settle or win lawsuits in the $500 million range. That's how much money Beta's worth if it ever gets back online. Maybe even more than $500 million, because they were going to expand it, and the NPV of the expansion was going to be huge. You also have the possibility of winning the lawsuits and having it restart, right? Then, of course, oil has just gone skyrocketing high. So I still own AMPY. It's a smaller position. I have call spreads in it. July 2.5, 7.5 call spreads, and April 2.5, 5 call spreads. And then I own about a 3-4% position in common. I don't plan on doing anything with it. I still own my BSM. BSM is my second largest position. And that's to me, is nothing but upside with oil and gas over the next 6 to 12 months. Right. They also have claims against the Marine Exchange of Southern California for not notifying them about the anchors striking it. And it would seem to me that all their claims are pretty valid. They didn't create the accident. Any new interesting ideas? Glenn, you speak to me on Twitter all day. You know what my ideas are. My 2 new ideas that I really like are SHLX and CNR. I don't believe there's anything else that I put on. MNTV and Zen, I told you I put on those combos. but it's small. Those are smaller. And yeah, you know, in this tape, if I own Magnet Chip, it's down less than 1%. BSM's up 1.5%. AXSM's up 8%. Cure's up 2%. It's one of my biggest positions. MNTV is flat or up 1%. You know, it's hard to be disappointed with the way my stocks are trading. I'm just not hedged against them. So I'm not making any of the money on the market imploding. What is that? I love when I hear things go off. Oh, I see what's happening. Oh, nice. I would really like to hear people discuss CNR with me, because there's no reason why, if the buyer has had a change of mind based on how the stock market's doing, it strikes me as they would have already announced that they've changed their mind. So then the only thing you're left with is that the board thinks either 24.65 is too low, which I think is really unlikely, given they negotiated with them before they put the press release out, or you have another bidder that came in. You know, tell me where I'm wrong in that reasoning. You know, crucial to my thesis there is that the guy on Vic, it's his biggest position, and he thinks 2022 is going to absolutely crush it. And that's the reason why that they canceled the conference call. And of course, the buyer knows what the guidance is and what the company business can do. That's why the buyer wanted to pay 24.65 for it when it was trading at 14, right? All that was known. Anything else, guys? Oof, some of these moves are just brutal. Like SHLX going down right now makes absolutely no sense. The board of SLHLX, okay, is literally going to look at the precedents of both BPMP and NBLX. And Shell could give two shits about the stock market's doing regarding rolling this up. Not to mention it's an oil pipeline. And it should be, it's doing fine in this environment with oil surging. They don't make any money off of the variability of oil. But it's not like we're talking about an industry that's not thriving right now. So, that to me is like the most uncorrelated idea. Glenn, you aren't wrong. The sponsor is not a sponsor that walks. Well, that's even better news if that's the history of the sponsor. I do not know their history, but it makes no sense that they would have made it this far and put that bid out to then change their mind over a few percent move in the S&P 500. Because that's what it is. The S&P is down. I'll tell you. They made their bid. I looked at this today. I was curious. They made their bid like Feb 14th, I think. Let me just pull this up. I think it's important. They made their bid Feb 14th, okay? And Feb 14th, the S&P 500, the SPY was 440. And today it's 430. It's down a whole 2.5%. The horror. So it feels, the volatility feels much worse than it has been. And there would be no reason to be inclined to think that as a result of that move in the S&P 500, that the buyer has somehow had a change of heart. Especially when this business shouldn't have any volatility regarding Russia to housing, housing related. So, yeah, I would think that they all try to wrap it up sooner than later. And the fact that they didn't guide means they think it will be wrapped up sooner than later, or else they would have guided on the call today. They would have had a call and guided if they thought this was going to be a multi-month kind of thing. And they didn't do that. God, there's some nasty stuff in this tape. All right. Any other things? Any other questions? I'm going to log off and go in the fetal position in the corner. I'll see you next time when we have a win. The SHLX, I think, could take as soon as a month because that's how long it took before, and as long as 4 months. My guess is it happens much closer to a month than it happens in 4 months. They already have the complete playbook here. And as Glenn says, there's reflexivity in the stock price. So they want to do it while the stock price is impaired, as opposed to the stock price going to 1450 or 1470, whatever, because then the special committee might feel the need to take a premium to that. And there's no real magic sauce to what the price is going to be here, right? It's a sponsor stealing it. So they're going to probably use the precedence of the other two and just do something very similar to it. My guess is a 15% premium. Somewhere between a 15 and 20% premium. You heard it here first. 15 to 20. That's the range. 15 to 20% off of $12.89. The wild card is with the dividend, which I'm every other situation they paid the dividend as well. All right. Peace. Take care, everybody. Be safe out there.